Hey guys, welcome back to another episode of my TFSA portfolio. I was away this past weekend, so didn't get a chance to film, so I'm just doing that right now and releasing this video on Thursday. First off, let's go over the transactions that I made in the past week. So if we go over here, we can see that I deposited again another $200 of cash. And if you guys have been on my channel, you know that this is week 33, and I've been showing this portfolio basically every single week, minus a few of them here, but you can see every single transaction that I have here. I'm not hiding anything, so if you want and enjoy this transparency, then subscribe down below as well as leave a like. The different stocks that I bought this past week were Shopify, Power Corporation of Canada, as well as Enghouse and Algonquin Power Corp's utility. I continued to buy Shopify as it dipped below the $1,700 mark. And you can see I've been buying Shopify very often, basically every single week, once or twice. All these partial orders here. Buying below the $1,800 mark or just around the $1,800 mark. I truly believe that Shopify is a great long-term play, even though it's fairly expensive right now. Shopify has a great customer base that will continue to use their product, and they continue to grow rapidly as a company. In 2020 as well as 2021, they almost showed triple-digit growth in their revenue. And as well, the company is profitable right now. They have roughly around $1 billion of net income for the year. The next company I bought was Power Corp of Canada. And you guys know that every single time I buy this, I keep hammering the same point over and over again. The net asset value of Power Corporation of Canada is around $50 last time I checked. And before that, prior to that $50 mark of net asset value, they were sitting around $42 or $45. So right now, the company is fairly undervalued compared to the net asset value. On top of that, we'll see later on, they pay a nice juicy dividend, which I did receive this past week as well. I got $7.16. Now moving on to the third stock that I bought, it was Enghouse. The reason why I bought Enghouse is because my cost basis is around $55 to $54 per share. Seeing at $53, and this company is fairly well run in my opinion, I decided to scoop up another share here. Enghouse does also pay a dividend, and they're also a software company in Canada. And these technology companies, they usually trade at a bit of a premium. So for me right now, Enghouse is a stock that I'll continue to average into as long as it's below my cost basis. Lastly, we've got Algonquin Power and Utility Corps. Algonquin Power is focused more on renewable energy, and that's kind of the way of the future. At least that's what the government is really pushing. And because the government is really pushing renewable energy, Algonquin Power Corp does benefit from that push. I decided to buy 2 shares at $17.82, which is below my cost basis. My current cost basis is somewhere around $18 to $19, but we'll see that later on when we review my entire portfolio. Now jumping over to the portfolio metrics, the total market value of this portfolio is just under $9,000. I've gained 6.15% since starting this portfolio in March 16th. In terms of dollar amount, this portfolio has changed by $521 to the upside. However, if I would have bought the TSX index instead of every single one of my purchases in the past 33 weeks, I'm actually down compared to the index by 2.16%. So the TSX index is performing fairly well since March 16th. Now jumping over to my entire portfolio, these are all the stocks that I own and how much I have invested in each one. You can see the quantity of shares in column H, the current market value, my percentage return since I started this portfolio, as well as the profit or loss in dollar amounts. Now if we sort this by current market value from the highest value stock to the lowest value in this portfolio, we can see that TD Bank continues to show up as number 1. I swear just like 5 or 6 weeks ago, TD Bank was down at around $81 per share. That's off of their earnings. However, look where it's at right now. New all-time highs at $91.12. This stock has returned me 10% and pays a dividend yield of 3.5%. TD Bank, in my opinion, is one of the better run banks just from a consumer standpoint. I enjoy the accounts that they have and just love the fact that if I keep a minimum balance in there, I can get banking for free. With a bank like Borrowell Bank, which is the largest bank in Canada, you basically don't have that option if you want all the bells and whistles in your account. Another bonus about TD Bank is the fact that they're the second largest bank and they have a lot of branches. It's harder to find BMO branches, Scotiabank branches, and CIBC around where I live versus TD Bank. It's just a lot more widely available. So that convenience is also another reason why I bank with TD. Second on this list, we've got the Bitcoin ETF, and yes, I'm looking to sell out of this very soon. Probably around December timeframe if we see Bitcoin bounce up a little bit more. Bitcoin is still kind of floundering around its previous all-time high of around $80,000 Canadian. And I think that Bitcoin could break out above that. And once we start to see signs of that, then that's when I'm going to start averaging out of this position. I've gained 50% since I started this position. My average cost basis is $7.73. Personally, I would not be buying any more Bitcoin right now. I think there's a bit too much risk, and the end of the 4-year cycle is about to come to an end. So that's my personal opinion and my outlook on Bitcoin. Let me know your thoughts down below. Stock number 3, we've got Power Corporation of Canada. In this stock, I'm up 10%. And here's the dividend percentage. It pays a whopping 4.3% dividend. On top of that, as I mentioned before, it's below its net asset value. Let's just go over here on Google and find out what their net asset value is. So here we go, the net asset value of Power Corporation of Canada. The last time they updated it was June 30th. I stand corrected. It's actually $51.60, not $50. So buying these shares, you're getting it at around a $10 discount right now. Looking at the other stock that I bought this past week, Algonquin Power Corp, my cost basis is actually $19.24. So buying around the $17 mark is definitely going to help me get my cost basis down here. So as I'm still down around 7.26 percentage points on this position, I'll probably continue to look to add to this position. Same thing with Enghouse here. I'm down about 9% on this position. So this is a great time to average in onto a company. I don't know why it says no dividend here, but Enghouse does pay a dividend as far as I know. So maybe there's something wrong with the spreadsheet right now. Now looking forward in the week to come, let's see what I'm going to buy. Now Shopify has jumped back up to about $1,800, and I'm up actually 3.36 percentage points on this position. And if you remember this past week, I got shares for just under $1,700, which is pretty sweet. I think this week I'll probably hold off on buying more shares of Shopify, but if we see it drop below the $1,800 mark, I'll probably continue averaging into Shopify. On top of that, I think I'll probably buy some shares of Well Health Technologies as it's down below $7, which again is my price target for this company. Other companies I'm looking to add this next week is probably Algonquin Power, just because again it's under that $7 or $18 mark, and that will lower my cost basis. So look out for me adding these 2 shares and maybe something else. I potentially may add something new next week, so if you want to keep up with that, then subscribe down below. That's all for this week on my TFSA portfolio. I've thrown up 2 videos on the screen. If you're interested in those, you can check them out. If you're there, I'll see you there. If not, keep up the grind and have a great day.